All right, guys, welcome back to another episode of the Mogul Marathon Real Estate Podcast. I'm your host, Yannick Cudjoe-Virgil, and I'm so excited for you to be here today. Our guest today is Ismael Reyes. Now, Ismael, or as we know him as Ray, has actively been investing in residential real estate since 2005 and has focused exclusively on multifamily real estate since 2016. He's also the founder and managing partner of the Admirable Group and MI Real Estate and has led investment firms in the acquisition of 14 multifamily properties totaling over 900 units and valued over $100 million. Ray also provides independent consulting to multifamily investors and is the host of the Greater Central Florida Multifamily Investors Virtual Meeting and is the best-selling author of BLUF, The Bottom Line Upfront About Passive Investing in Multifamily Opportunities. Ray is retired as a lieutenant colonel from the U.S. Army with over 28 years of experience. Ray, thanks for being on the show.
My pleasure, Johnny. Thanks for having me, man. I'm excited.
So, Ray, let's give the listeners today a little bit about you, your background, who you are, and how'd you get to where you are today?
Yeah, sure. As you mentioned, I did 28 years in the military, retired as a lieutenant colonel. But even as a child, as I was kind of doing my, my formative years, I always had kind of multifamily in my sights. Monopoly was the game that I played and loved, and it was just a matter of time. And it was great to make that transition. I learned a lot, and I enjoyed my time in the military. I enjoyed serving something bigger than myself. And then it was just time. It was time to do something else. And I saw this opportunity to really build, generational wealth for my family, my extended family, my mother, and then also bring that opportunity to others, because there is a path that I wish I would have known a lot sooner. That even as I was working, full time in the military and deployed overseas, that I could have been doing this passively and really building some wealth in the process. So yeah, I think that kind of sums it up. It's just my life has always been about serving, and I feel like now I'm serving my family and serving others and helping them grow their wealth. Because we can't help others if we're broke. That's just the bottom line.
That's great. And thank you for your service. So tell me a little bit about, how you were able to use your military background and experience, things that you've dealt with, I'm sure, in many high pressure situations. Tell me about how you were able to translate that into entrepreneurship and real estate.
Sure. I mean, I guess first and foremost, you are from the very beginning as a leader in the military. You're exposed to being in front of people, either leading or, if not leading, at least following in a way that supports whatever the mission is. And to me, that's always been like critical when you're working in this type of environment where you're partnering with others. You're either leading a group or you are following, in a positive way, somebody who's in charge. And following doesn't mean you're just a yes man. Following means that you provide input, and sometimes you disagree and you provide other ways of potentially doing that. That's how you add value. And any leader that just wants people to listen and basically nod their heads north and south is not really leading. And his people aren't giving him the best advice, his or her people. So I think all of those things in very general terms translates well to this kind of business, where while we may not be serving a mission of importance or geographic importance or something nationally important, you still have to lead a group. And there are ways to do that properly if you're in charge, and there are ways to do that if you're following someone else who's in charge.
Yeah. Leadership is all about leading from the front. And in my roles from being in the sports space, I've always been the person to be in the front, the person to not necessarily give direction on what to do, but show how it's done. I think, in this specific space of entrepreneurship, especially when you're building your business, when you're building teams, although you might have a vision and you want to relay that to your specific team members of how you want things to be done, it's always better when you're able to show them that, hey, you're willing to get your hands dirty. You're willing to take on the task that you may not want to, but it's part of the greater cause to get to the next level. So in this space, real estate, multifamily specifically, syndications, where it's a ton of different moving parts in this business, you have to know how to be a leader, but also a great leader, a proficient leader, someone who's willing to lead in the front. So what was that scaling pattern from getting to $100 million in real estate? Transitioning from the military to 100 million. A lot of our listeners might be thinking, man, that must have been a lot of work. That must have been a lot of nights of heartaches, struggles. Take me through your first deal to $100 million in real estate.
Yeah, my first deal was actually, I just come back from, I was still on active duty, and I'd done a couple of deals as a passive investor, and understood. I wanted to make sure I understood multifamily before I jumped in it on the active side, and because I did a lot of single family investment in my career, and I had built up a little bit of a portfolio of just single family, but it's just not scalable. And this is what you're talking about, how to scale. So I learned, how, the different language. It's a little bit different language. You underwrite, analyze a little bit different, if you will. And then I jumped in before I even did my final retirement. I remember I was in Miami working at the United States Southern Command, and we were in the middle of my first raise, and we had a deal, and I was trying to bring in some capital. This was when I realized that I couldn't stay in my current job in the military and do this full time, because essentially I was trying to raise capital for an acquisition. This was a 59 unit, and that I was doing in Tampa, and I couldn't get on the phone to talk to people. I could, if I had to go to the phone, I had to leave the building, was a secure facility, to be able to get on my personal cell phone to do that. It just was not conducive, and I had to make that decision if I was gonna embrace this, that I needed to go full time. And so sure enough, shortly after that, I retired out of the military. I got some time. They normally give us 6 months to kind of get organized after 20 plus year career, to kind of get ready for our next steps. And my step was clear. It's how to, first of all, continue on this deal to make sure that I was a viable partner in that deal, and then move forward from there. And so after that first 56 units, they say it gets easier when you build some momentum, and that's true. It does get a little bit easier. And so what happens is, you do one deal, whether you led the deal, or whether you were primarily coming in to supplement the original finder of that deal as a general partner, and other opportunities open up, and people start reaching out. And then the more money, and the more experience, and the more that you can bring to bear into these deals, the better your opportunities to participate in more of them, right? And so
Yep.
my concern was actually not actually scaling to 100 million, which is kind of where I'm at today. It was doing it in a way that was not reckless, because I think in this business, that's $100 million is essentially about 5 or 6 properties, right? 5 or 6, 7 solid properties, and if you partner on those properties, you can get to that number pretty quick, because of the scale involved. But I think where you have to be careful when you're doing your business is, okay, it's not about getting to 100 million. How do you get to the next deal, and how do you build your team and build your business so that you are fulfilling the promise to your investors? In our case, that is our primary responsibility, is to ensure that our investors get what we tell them they're going to get. And these are estimates, but we normally underestimate so that we can over deliver. And so a lot of people will get into this business of multifamily, and they start finding deals and getting into a lot of deals. And before you know it, the tail becomes an issue, because they can't deliver on the deals, on the operational side, on the execution side of deals that they have, and they're constantly chasing new deals. So for me, it was not so much, can I get to, 1,000 doors, or higher. It's like, how do I do this in an incremental way so that I continue to deliver the value that I want to deliver? And I think it may be different because that approach is different because of where I am in my life than other people. I'm in a position where, and this is not to brag, but because of my investments and because of my retirement, I really don't have to work. I mean, I'm not rich, obviously I've been growing my wealth and helping others do the same, but I'm not rich, but I can stop and I would live comfortably. So for me, that's not the end goal. If you're a young person though, and you still have children that are going to school, and all of these responsibilities that come along with that, and you have a W-2 job that you may quit in order to do this full time, you may have a different vision of an urgency to getting that next deal. And sometimes that urgency means getting into bad deals that don't necessarily deliver for investors. So I'm able to kind of do this in an incremental way versus just this notion. And nothing wrong with people that want to talk about 10x, but at the end of the day, 10x in a way that you can continue to deliver on the promises that you've made.
Man, I want to put a pin in that right there, because that I wish you can drop a mic on a podcast because what you just said, there's so many lessons in what you just said. So there are two things that I think I want to kind of dive into. The first part is scaling in a way that's smart and is efficient business wise, especially when you talk about for your investors as well too, right? Because the capital is the most important part of real estate private equity. People might say the deal is, but if you have you need the money to buy the deal at the end of the day. And if your investors are not taken care of, if they don't feel like they had a good experience with you, they are likely probably not going to invest with you moving forward. And so you were smart enough to realize that I want to do more and more deals, but it's the administrative part of things that takes a lot of time, but it's also important as well too, right? And that might come down to investing in a portal where you can have your investors in and they can see all the documents, or that might come down to putting out email blasts, right? Letting your investors know, hey, this is what is going on with your investment. All sorts of different things that people don't talk about in the specific space of real estate private equity that is important to do early when you're scaling to the level that you have scaled, right? Because it's easy to see things on Instagram where this person owns 100 million or this person owns 500 or, so on and so forth. But are they really good operationally too, right? Asset management is another beast that people have no clue about when they get into the multifamily space or the commercial real estate space. It's a lot of work in asset management. And so understanding that up front and having a plan for that up front, whether it's outsourcing that to a partner or hiring someone, maybe it might be a virtual assistant, it might be hiring an analyst to underwrite deals, because you still have to get that deal flow coming in too, right? What's the thing, right? It's 100 deals to offer on 10 to get one. Somebody has to underwrite 100 of those deals. So just your wisdom on that is so important for people who are getting into real estate private equity. You want to have this holistic vision of how you want your business to run, because it's easy in this business to have the business run you after you've done a multitude of deals, right?
Now, Yannick, the secret to the first deal, because I think a lot of people, once you do one, and you kind of, it opens up to your eyes as to how you can do. I mean, it's like the light bulb goes up, like, oh my goodness, this is how it works, right? And you learn and you learn as you go. But after that first one, you can really build some momentum. But I think a lot of people make the mistake of wanting to do it all on their first deal. So you want to find a deal, you want to negotiate with the broker, you want to, talk to insurance, you want to, work the taxes, do the underwriting, investor really, and like, that's just too much. These are too big. these are too big. This is not a single family acquisition where you can kind of do that on your own. You have to have a team in place. And so what I recommend is, as you're looking for your deal, maybe your first deal that you run, find someone else that is doing deals that still is trying to plug a hole in their team, and figure out if you can plug that hole. Talk to them about what you can bring value, what value you can bring to them, and get into a deal that way. Get your foot in the door that way. You'll get into your first deal a lot sooner. And what you also do is you start building your network a lot sooner, because now you have access to the network that group has, that greater group. So I call it the foot in the door technique. You get your foot in the door on the deal. However, bring some capital to the table, some risk capital, whatever it is that you are good at. Underwriting. If you're a great underwriter, underwrite the deals for them for free. Say, hey, and then get them to work with you, bring you on board on their team, and then all of a sudden you're in that deal. And then while you build that as a partner, you can decide whether you want to continue to partner with that group, or if you want to kind of basically break away and do your own. But you're not waiting, because a lot of people get frustrated. They want to find the deal and do all this stuff, and they never get there because it's just too hard to do by yourself.
Yeah, and that is one of the headaches and the crashes that I ran into when getting into this business. Was I had the professional athletes mentality of like, I'm gonna do it all by myself. I got to this place by myself. Everything can be on me. But 6 to 12 months later, I'm just shaking my head in agony, like, man, this is a lot of work. I wish someone would have told me earlier. I want to touch on the second thing that you said, which was really important too, specifically when getting into the world of real estate private equity, right? You touched on being in a position where you don't have to get into bad deals and you're not necessarily chasing deals, right? Having that flexibility on your own side financially to be more selective. Maybe it might be in your partnership, it might be in the deals that you acquire. Dive into that a little bit more about it, just making sure that you have a plan financially too in real estate private equity. So for me, I leverage my personal portfolio of single family investing to have that cash flow to sustain the my lifestyle, right? To pay the bills, etc., keep the business moving. But then also was able to transition into private equity as well, right? So talk about the importance of like having that good base, because a lot of people, when they get into or they want to get into private equity, they might have been in the single family space and they might have been in the fix and flip space, and that business is transactional. But the world of private equity, these deals take maybe 3 to 5 years. It's a long time before getting that big payout, right? So the in between is extremely important. Yeah. Give us a little bit more wisdom on that part. Why it's important to have that foundational base to sustain yourself as well.
Yeah, no, it's very important that and I when people call me, and I have an open door policy, if you want, on my calendar. I can talk to anybody about this stuff. If I have the time and I got nothing going, I'll talk to people. And I get young folks especially that want to talk to me. And one of the things that I tell them to that particular point is like, listen, you have to measure out what are the responsibilities you have in your life. Do you have kids? Do you have, maybe you're helping taking care of parents, or, there's all kinds of scenarios where, there is a responsibility that's going to require monetary support to do. And so if that's the case, then you got to have to figure that out first, I think, and have a solution for that before you look to, jump into these things, because real estate is not get rich quick. You invest in real estate and you wait, and in a couple years, 2-3 years, like you said, all of a sudden you've really made some traction. But you have to have some either money set aside, or you have to have a budget by which you can, live and not be stressed out with your life, so that you can do this business. And so if you're young and you're by yourself, maybe you can sleep in a car, sleep in somebody's house. You can house hack. You can do all kinds of stuff that are and then really focus your entire world on spinning up and getting this thing going quickly, and you suffer by yourself because you have a goal in mind, and there's nothing wrong with that. I mean, that is how people 10x. You live on rice and beans, so to speak, and you just crank it to another level. But if you have responsibilities and you have family, then you have to take that into consideration. Now, if your wife is in it with you, or your spouse, if depending on who we're talking about here, they're in the game with you completely, and they're willing to suffer just like you for the bigger gains in the future. Perfect. But I tell you one thing: when I was in the military, I wanted to buy a quad. I always, this is my first step in getting into multifamily. I'm gonna buy a fourplex, and I'm gonna live in one unit, and I'm gonna rent the other three. And every time I tried to pitch that to my wife, she said, "Not just no, but hell no," because I was always gone. So I mean, and where are your quads? They're not going to be in nice neighborhoods. They're usually in places where it's working class. And so she's like, "No, you're gone 9 months out of the year, and you want me to live there and be." No, so it didn't work. So those things have to be accounted for first. Get that figured out, and then work on that next. And you may have to start small. Some of these deals on the multifamily space, you need $25,000, $50,000. But guess what? There is a way where you can partner. You can create a joint venture with a smaller group of like-minded individuals, and you guys can all put in $5K and get into one together as a group. We do that all the time. We joint venture into multifamily deals because you can leverage more in a group. And so those are all kind of little tricks that you can do to kind of get there a little bit sooner if you just don't have the wherewithal by yourself. But always, always, always take into consideration your personal situation, because if not, then you start getting into bad deals because you're chasing. We call it an acquisition fee in multifamily. You get, for the work that we do, we normally get a 2% or 3% acquisition fee on the deal. And that sounds great. It's very much like a real estate agent that gets 3%, 2% on when they sell a house. The difference is if you're chasing bad deals, you get that acquisition fee and it's good. It gets you going. But if it's a bad deal, you probably will never do another deal, and you essentially burn yourself for the long term because you want for a short term gain. So you just have to be careful.
Yeah, man. I know that your clients who you consult with in the multifamily space get a ton of value from you, because there's so much wisdom in a lot that you just said, especially when we talk about having that financial base. I mean, I know that your clients are getting a ton of wisdom. So let's switch gears. Here, what types of deals are you currently investing in? What markets are you investing in, and how did you kind of develop those partnerships to invest in those opportunities as well?
Yeah, so I love the Sun Belt. I mean, I'm in Orlando, Florida, but Florida, for a lot of reasons that I go into my website and on social media, it's just a great place to invest. The things that I look for in a market, they're pretty. There's a lot more that goes into it, but at the very base level, there's really three things. You want to look for population growth. You want to look for economic growth. And closely related to that is you want to see what the unemployment, trends are, whether they're going up or down. Economic and unemployment are similar, but they don't always run at the same, cycle. So you have to pay attention to both to make sure that things are trending in the right direction. So if you look at those three things, and then you pay attention to the other part, which is the risk aspect of it, you want to pay attention to what is the political risk in that state. How business friendly are they in that state? Is there state taxes? And you start looking at those things. And then at the micro level, what does the crime look like in the places where you're potentially looking to invest? So now that you zero in on a metro or a county, then you got to start looking at those other aspects and realize that there are, in some places, it's not a clear line between a good area and a bad area. So you really have to understand it. But so all those things are, I call it the big three plus, minus R, which is the risk. So you take a look at that, the big risk and then the micro risk, and then you weigh those other things. And that's kind of how I drive down on my markets. Texas and Florida are fantastic. They don't have state taxes. And it doesn't take a year to evict a tenant. And nothing against, people always, when I say stuff like that, they go, wow, this guy's, really against tenants. No, I'm not against tenants. but my investors invested with me and they want a reasonable return. So I can't let tenants live for free for a year in a property where I have to deliver to investors. So there has to be some balance there. And in some states, there's no balance. I mean, California, a squatter can sit in a place for a year and you're done. You're stuck. In New York, the same. There's all kinds of protections for folks that really are not generating income and creating economic driving the economy of those locations. They're just depressing things even more. So in Texas and Florida, within 3 months, if a tenant is not paying, you can evict the tenant. I mean, reasonably so, right? You're not going to do anything crazy, but at the same time, 6 months later, it's hard to make a profit that way. And so those are the things I look for. And then as far as partnerships, the way that I started was I realized, because like you, I had a single family portfolio. I kind of knew how to analyze how to get into a deal. So I figured out which markets I wanted to be involved in based on my criteria and my analysis. And then based on that, then I started going out to conferences where there were multifamily conferences where there were operators that were operating, operators that were there attending. And I would just go up to them and I would say, hi, this is me. I'm here's where I'm at. This is how much capital I can bring to bear. Or if in somebody else's case, I can underwrite, whatever it was, I was presenting those, what I could bring to them. Because if you're getting started, you're not selling, you're not giving them anything. They're already there. You're trying to get in. So you have to present something that's valuable to them. And so that's how I just essentially, once I realized what operators were operating in a space that I wanted to invest in, then I pursued those, and I was successful on a couple. And all it takes is one or two, and then when you start working with them and they see your commitment, then that will grow into more deals, because nobody's in the space to just invest in one multifamily. If they're successful and they're able to win and deliver for investors, there's gonna be another opportunity. Brokers don't want people that are kicking tires. Brokers want operators that buy, that are able to deliver, because they make their money on the sale. So if you've got people that never do a deal, brokers will never reach out to them with the good ones, and you'll never get there. So
yeah, no, that's good stuff. I think when it comes to finding partnerships too, it has to definitely be a level of due diligence, I think, as well, right? And a lot of times people kind of skip over that and invest in other people's deals. Is there like a due diligence process that you have when vetting operators, whether it's looking at their portfolio, asking them how successful they have been in other projects? What does that due diligence process look like for you?
yeah, no, and that's a very, very interesting topic, because it's something that you do have to consider, especially if you are looking at partnering with others on their deals, right? So there's a lot of ways to do it. There are some paid services out there that essentially very similar to like when you have a tenant that is trying to apply for one of your units. There's a place you can go where you provide some information, basic information, and they'll do some search. They'll do a search for you and talk to you about that. All their businesses can show up. And you can pay for that. But even nowadays, you can probably just ask them, okay, what are your other properties, and then ask them for some references based off of that. Ask for some investor references and just Google their businesses, see what's out there. You'd be surprised. We were looking at a deal one time, and I just happened to type the person's name, and the person was involved in a lawsuit. Now, good, bad, or indifferent, I mean, you can go into that. Maybe there's, you do this business long enough, eventually there's going to be some legal things that happen, but at least there's a flag for you to follow up on. And if they can't present to you, what's going on in a sound way, or they just didn't tell you, then that definitely is a flag. So there's a lot of ways. The other thing is, the more you start working in the space, Yannick, this is a small world, and eventually people will know you. And if you've done something that is untoward, eventually, if you ask a few people, you're only one or two connections away from someone being able to say, yeah, I work with that guy or gal. And my recommendation is that you do or you don't. That's up to you. A lot of times they may not even tell you that, to say, yeah, I wouldn't work with them, or I haven't worked with them. and I wouldn't want to work with them. And they won't tell you anything else, but they'll give you an inclination somehow that there's something there. And you got to pay attention to that. You got to pay attention to that because, it could be something that there's more there. So you start digging a little bit. I'll say that the most important thing is a lot of times in these partnerships, I always tell when I'm working with people, whether I'm the lead sponsor or not, I present all of the documents to them, all the documents. And I always tell them, do your legal search, do your, search everything, work with an attorney and have them review all of these documents to make sure that your interest is protected. Right. And if you have a question about me, I'm happy to provide whatever you want. Transparency is where I think there's, the line is drawn. There's a lot of folks out there, unfortunately, in this business that somehow they believe that when there's bad news, it gets better with time. And I guess that's something I learned in the military. Maybe there are other places also. There's that teaching, but essentially, bad news is something you have to address ASAP, and you have to tell people about ASAP. But you do it in a way where you can give them what you're doing to fix it. So let's just say you have a plumbing issue, a huge plumbing issue in the property. It was unanticipated. Well, it happens, and it may impact, some of the distributions for a particular quarter, because now you got to take some money. If you didn't anticipate it and you didn't have operational reserves, now you have to deal with that problem. But okay, so at some point, investors are going to know that you didn't provide a distribution. I mean, it's going to happen. So why wait? Tell them what happened. Give them pictures, show them, give them as much information, and tell them what you're doing to fix that. Here's what we did. Here's what we're doing, and we're going to get this ship righted ASAP. And they'll appreciate that, because a lot of investors have gone the route of single family, and nobody's ever had a single family. Nobody out there that has done single family has never not dealt with an issue with toilets, roofs. It just happens. That's part of the business. But you can't tell investors that. You can't not tell them that. You have to tell them. And then if you're dealing with partners, the last thing you want is having information, having different levels of partnerships where, only 2 or 3 partners get all the details, and then everyone else is kind of left out in the dark. And I try to flatten that out. I want all of the people that are partners in the deal to know all of the pertinent information, because either they want to know, or maybe they're not paying attention, and all of a sudden an investor asks, one of their investors asks, and they can just look at the emails and they can see, okay, this is what was happening there, but they've got the information. And so start asking about transparency, start talking about what kind of reports their investors get, and ask your investors, did you actually get reporting? And you'll be able to, sort out some of these operators that aren't, again, for whatever reason, they're going after other deals and they're forgetting about current operations, which is critical in this business.
Yeah. So many gems and what you just said there. In this business, relationships are all about transparency and communication, from the top down, right? Between partnerships, there are a lot of times, like you said, things are going to happen on different properties, and being able to have that first level communication transparently with your partners are really, really important, because you have to, like you said, relay that information to your investors. And your investors, like my investors, we've had problems on our deals, right? We're no different from other folks, but we over communicate, before it happens, as it happens, through the end. And my investors honestly don't communicate with me, only if they really have a question. Maybe it's about like their K1s, but that's just a testament to the level of communication, because they're busy professionals. They're out with their families. They just want a return and some tax benefits, and if you are able to establish that communication on the investor level in a seamless way, and like I said, transparently, I mean, they're going to love you for that, right? And also on the top level, like I mentioned, having that first level communication when things go bad, man, that's really important when it comes to vetting your partners and just having a good experience. And I think in real estate. So let's Let's dive into the capital raising side for these deals that you've done today, or for the capital raising side for the deals that you've done within your portfolio. How are you able to raise capital for these deals, and what capital raising strategies have you found most effective in your real estate journey today?
Yeah, no, great question, because there's obviously, you mentioned there's two sides of these. There's the acquisition side of the asset, and then it's bringing capital to bear, and one doesn't work without the other. And frankly, if you've got the capital, you can probably find a deal, right? I mean, if you have the money sitting there, there's a chance you can go to someone and say, "Hey, I can
I
close
always like to
tomorrow."
say, yeah, I always like to say, sorry to cut you off. I always like to say, like, if I had $100 million and I went to a meetup and I said, I got $100 million and I just need some deals, I guarantee I'd have 100 million, sorry, 100 emails in my inbox, the following day. But continue.
Absolutely. I think the biggest deal on the raising capital side is you have to have a platform. And by a platform, I mean is people have to know who you are, because essentially, uh, in today's age, yes, you can have a small group of investors of very high net worth, high money people. For example, for me, a military man, that's not where I came from. Most of us aren't rich. I mean, when you join the military, even our officers, I mean, we were well paid, but we're not rich. And so you have to know that that you're not going to make it with just a few. And even if you did, even if you had $10 million from one investor, the minute you commit that money, it's tied up in a deal for maybe 2-3 years, maybe up to 5 years. What do you do if you don't have any other way to generate capital? So you have to have a platform that can bring others along to you. And if you do it right, so what I did is, the first thing and foremost, I wanted the people to know, okay, my military background. I wanted them to know a little bit about my story, and then explain to them, how I was able to get to where I am. So I'm building at least, people can see where I came from. That in and of itself creates some level of trust, that they can see, okay, this guy is, he's served in the military. And in my case, when we start talking to people, for example, I know probably more people know about clearances nowadays than they've ever known before. But I had a top secret clearance. I mean, I couldn't, do much without the government trying to figure out what I was doing if something was, I was doing something wrong. And so when I'm able to talk to people about that automatically builds a level of trust. The other thing is, once you have a personal, some people have at least a personal level of trust, you have to also provide something that tells people that you know what the heck you're talking about in multifamily. Because I may have been the best officer in the military, that doesn't mean I'm going to be able to do this other business, right, or this other job. And so you have to talk about your experience, what you've done. You put it in a way that people can understand, and then you become a subject matter expert by providing value to them. Whether it's like me, I wrote a book, I wrote blogs. I'm on social media, trying to provide some content. When I see something that's pertinent, I'll put it out there and I'll give my opinion on what's out there. And so all of these things, my website, they're all parts of a platform, and it's a platform that allows people to find you, to find you, to trust you to some level, and to take you to really begin that journey of like, okay, how do I go from what I know about this individual to investing in a deal? So it all kind of goes to, okay, get a hold of me, let's talk, and then I can talk to you about this stuff in very general terms. And if you're interested, then great, then I'll start sending you my deals, and I'll talk to them about how they work, so that when we actually have a live deal, it's not a matter of them understanding the process, it's a matter of them understanding that particular deal. So you do this even if you don't have a deal already in front of you, because you want to educate them about the process. And so those things are all important. You need to appear, and it's not an appearance. You need to be professional, and professional means, it used to be a resume, right? And you provide a resume. Oh my God, this guy's legit. But now it's about your presence and what you have on video. Certainly, this podcast that you have, Obviously, people are going to know Yannick. Like Yannick's got a podcast. He provides a lot of valuable information that provides people with some level of comfort that you know what you're talking about. And so when you take that and then you present them a deal, and they're looking to make some money, and you can show them how that this deal is going to make them money, then you grow your capital, right? Because people start going in. So you have to invest in a portal, and you have all these tools that get people to basically soft commit to investing in a deal when it comes up. The other way, and this is actually much faster because you're building trust through people that are seeing you and they may not know you at all. But the other way, obviously, a lot of people start in a 506B, we call it. It's a type of syndication where you're talking to friends and family. But friends and family are going to trust you perhaps as a person, but again, they also need to understand that you know what you're talking about. So either way, you have to build the professional trust. It's not just a personal trust. But once you do that, and it's funny. I was, and I'll tell you why. I was having dinner with a friend the other day, and I got a call from an investor, and the investor, and I'm like, oh, this is the investor, and my friend is looking to potentially invest. He's selling a house, and he's like, I may put some of this money to work because he was going to go overseas. I said, great, that's perfect. I don't press people. I just say this is an opportunity, and I invest alongside with you in these opportunities. But I got the call from this investor, and he literally put on the text, "Hey, what is this $276,000 in my account?" Because he had invested some money with me already on some deals, and he thought for whatever reason the money had come back. Well, no, it was actually a distribution from a sale of a property that we'd held on to for 3 years in Tampa, and he literally got that money. He invested $100,000. He got back almost $300,000. So he got a 3x return in 3 years. And why I say that is not just to brag, but that individual is so happy with that return that he's going to go talk to his buddies, and he's going to talk to his other family members, and he's going to talk to whomever and say, "You got to talk to Ray. I just made over $200,000 on my money. I mean, 3 times the money, right?" And so that testimonial will build your business more than anything that you can put on, as far as social media, website, and whatever, because it's essentially someone that already trusts you, that you've already delivered for, that then tells somebody else. And they already trust you when they reach out to you. When that friend reaches out to you, "Hey, I just talked to my buddy, and he said that, that you have some investments. I'd love to do it." Because they already have a testimonial that it's successful, that you've shown that you can deliver. So that's the other way that you are able to really generate a lot of momentum. It's just through word of mouth, which is why the investor piece, the communications, is so important, because even if you deliver a return to them, if they got a bad taste in their mouth about the way you communicated, your lack of communication or whatever during that deal, they may have made two times on their money, which is normally what we look for, to double people's money in a certain amount of years. But they're going to remember that bad feeling about whatever, right? So you have to take care of your investors, and they will put the word out for you, and they will grow your business for you because they're excited about what you've done for them and their family.
That's a great story. I'm sure that investor was very excited to get that return. I mean, you can't ask for anything more as a syndicator to deliver results like that. So congrats on that success. One of the thing that you kept saying over and over was just trust, right? Trust. People are going to invest with you because they trust you, not necessarily the specifics about the deal. And that's important too. The economics of the deal and the fundamentals. And you also do have to educate them. But at the end of the day, people are going to invest with you because of trust. They know Ray. They know what type of person he is. They know that you have military background, so you have discipline. You know how to lead. You have the experience. You have all the things that they can trust that you would be able to deliver on the expectations for them, right? Your clients, your investors. And that is something that I think is overlooked when people are raising capital. They think about, oh, it's about the deal and the numbers have to make sense. And again, that is extremely important. But when you have people who love you, who trust you, man, there's no ceiling for the real estate space.
Yeah, I mean, ultimately on those numbers, Yannick, you know as well as I do, a simple, click, a delete, and a change of one number on a spreadsheet, and the deal looks great. So while the numbers are good, and you have to do that, and you have to do that analysis, it still boils down to trust that the assumptions that we're using are valid assumptions, and that we don't, we don't tweak a number just because we're chasing a deal, right? And so that's why the trust is important, because essentially they're still, I mean, they're investing in you because they don't want to do all the work. They're passive investors. They could put the money in the stock market. They can do whatever they think is the best way that they can get returns. And when we present a way that is a better way to do it, when you start adding all the tax benefits, that's what they're looking for. You don't want to give them a job. It's like with a lot of single family investors. They think it's, I want to buy this single family and it's going to take care of itself. No, you just bought yourself a part-time job. You're going to asset manage it. You're going to be property managing sometimes when your property manager quits on you, if you have one. All kinds of things that you own the minute you buy that asset. And so a passive investor doesn't want all that. They want to be a passive investor. They want to see returns. They want to see information, and they want to every so often get their distributions. And then when you sell, they get the share of the profit. So yeah.
Yeah, that's 100% true. So you've been in real estate for quite some time now. You've had a lot of experience scaling your portfolio. If you had to start this marathon all over again, what would you do differently that would contribute to your success?
Yeah, great question. I think the biggest thing that I would do is get started, get away from, in my case, single family sooner, for all the reasons that we talked about. I remember, and I my wife and I talk about this every once in a while. I bought a property in one location when we moved to this. It was in where was it? Columbus. And we had this property, and essentially it was an investment property. And the next thing you know, I was sent overseas, and I was working in Mexico. And while I was in Mexico, I mentioned this, the property manager quit on us. And it was just because the tenant was difficult, and there were some issues, and the property manager was like, you know what? I don't care. I'm gone.
They gave you the keys.
Yeah. And now all of a sudden I'm like, my wife, I'm working full time, heavily engaged. These are 12-hour days already for most of us in the military. And I didn't have time to deal with that. So my wife had to deal with it. She was not happy. She was not happy about having to deal with that mess. And so I wish I would have learned sooner about passively investing, because I wouldn't have had those struggles, like, that where we were stressed out with everything going on. And if you have a W-2 job, whether it's military or not, you have your own personal stresses from that job, and you're spending 40, 50, 60 hours there doing that. The last thing you want, a lot of people want, unless they're really passionate about real estate, is to work real estate. They're just trying to generate wealth, right? And that's just one of the best ways to do it. And so for me, if I would have made that transition sooner and become a passive investor, it would have been better, because not only can in this through multifamily, as a passive investor, I can invest wherever I want. I'm not stuck to where I live. It doesn't have to be next to me. It just has to be someplace where the economic conditions are such that it's going to give me the best return, and that the team that I'm partnering with, I've vetted, and they're going to do a great job of essentially doing everything and just providing information to me and providing distributions. I don't need to take calls about toilets. I don't even need to take calls about, how do we bring in more tenants? They're doing all of that. And if they're good, they're gonna ensure that they know that I know what they're working through if there are any issues, because I'm okay with that. Things happen, but I want to know that they're taking care of it. And so I would tell people, I guess in very short, get out of single family as soon as possible. And if you like real estate, maybe you can do it full time. At some point transition over, so long as you have a plan. But if you don't like real estate and you're just trying to generate wealth, then invest where essentially you're going to make the best returns on your money without the additional stress of a part-time job that would come with it in many cases.
Yeah, so true, man. There can be a lot of headaches in the single family space. And
Yeah.
when you jump up into the multifamily space, you get the biggest thing I like to say is more professional management and just people, right? In the single family space, there's a lot of mom and pop management companies, smaller companies that might not have highly trained staff with a plethora of experience in real estate. And when you jump into bigger properties, like you said, you don't have to worry about leasing up properties necessarily. You don't necessarily have to worry about the tenants and the toilets and a lot of the minutia that you have to deal with in the single family space. And so, really, really great advice if you're able to jump into the multifamily space and, specifically on the passive investing side too. Uh, I think that's really beneficial. I think there's still yields to be made in the single family space, but from a return on time perspective, absolutely. Bigger deals, multifamily, it's just the way to go. So talk about your book, BLUF, the bottom line up front about passively investing in multifamily properties. Where can we find it? And definitely want to dive into that and talk about how much value is in the book.
Great. Yeah, it's easy to find. You just put BLUF Amazon and normally pops up on there. So it's pretty easy to find. And all I wanted to do with that book is I wanted to, tell people a little bit about me, and I wanted to explain to them in a very military manner, because in the military we always look we look at problems from a planning standpoint. So okay, so where are we now, and how do we get to where we need to go? Wherever that is, that's the end state. And so what I wanted to create is just a small book that could show people all of the steps that a passive investor should kind of know to before they decide to invest in a particular deal. And it takes them essentially all the way through all the players that are involved on the operator active side, to how to vet their operators, to some of the tax implications involved. I'm not a tax expert, but I know enough about how this helps a lot of investors essentially get major depreciation on assets through cost segregation and other ways, where you're essentially able to really provide some offsets, large offsets to whatever incomes you have, generally speaking, through multifamily. And so I walk them through that process, and it's a very short read, and it's very linear in nature, because it's just a simple process. Now there are obviously forks that can happen, and there's if you want to be active, there's some other things that have to be considered. But at the end of the day, it gives you all of the basic tools to understand the space. And not only is it good for passive investors, what I tell people is if you understand what passive investors are looking for, then you can use this book to reverse engineer what you need to do, because it's telling you what passive investors are looking for and should be looking for. So you as an operator can use the book to basically figure out how to attract those investors to your deals by making sure that you address all of the things that are important to them. So it's good for passive investors to kind of get their mind around syndications and multifamily investments, and it's also good for operators to get a better sense of how to bring capital to bear on their deals.
That sounds like a ton of value in that book. Just having that linear step-by-step process, like you mentioned. I mean, it's phenomenal when you're able to leverage someone like yourself and learn from you and things that you've done and your wisdom about how to get to that next step and how to just take things on a linear level. So, if our listeners want to follow you, want to invest with your company, how can they keep in touch with you, reach out to you, to follow your progress and your investments?
Yeah, that's good question. So everything can be found. All my social media can be found through my website, mirealestate.us, mirealestate.us, and from there they can even set up a call with me. Like I said, if I've got the time, they can click on my calendar and just carve out 20 minutes where we can talk about what they're trying to do. A lot of times it's other operators that are trying to get started. It's not just investors, and I'm happy to help them. So yeah, I mean that's the easiest way to plug in.
That's great. Well, Ray, thank you so much for this show today. I mean, that it was a ton of knowledge. I'm so excited that you were able to be on the show today. We talked a lot about raising capital, building your team, being able to have that strong foundation when getting into the world of real estate private equity. Is just a ton of knowledge and gems in today's show. So thank you so much. Thank you to our listeners for tuning in to another episode of the Mogul Marathon Real Estate Podcast. Let's take action and be great today. And remember, real estate is a marathon, not a sprint. Run your own race. Thanks again, Ishmael.
Thank you, Yannick. I appreciate it, man. Take care of yourself.
All right, have a good one. Thank you.